Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grabner. With us, as always, to talk all things markets is University of Missouri Scott Brown. Good afternoon, Scott.
Happy Friday, Megan.
Definitely happy Friday. I hope you have some sunshine
Absolutely.
and nice spring weather after the rains that have been coming in throughout the last couple of days. I'm ready to go outside and enjoy my sunshine.
We're getting to the end of Friday. That's right. Let's get outside.
All right. As we get things started today, we're going to talk a little meat animals. We're going to talk a little restaurant performance. We're going to get into things like chicken wings as well. But for us to get started, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, cash-fed cattle were down $2.50. We saw those feeder cattle markets anywhere from steady to $5 lower this week. On the future side, the June live cattle futures contract was up 50 cents, while the May feeder cattle futures contract was down $4.70 this week. Corn futures were up again this week with that May futures quote up 82 cents. On the beef side, choice box beef prices were up $11.50 this week, pushing $3 for that choice box beef price. We saw increases across the board in the components of that box beef this week. On the hog side, cash barrel and gilts were 70 cents higher this week. The June lean hog futures contract also up $4.10 on the week, while the pork cutout value lost $4.40, by and large on what was weaker belly prices this week.
And we're going to get into a little bit more as we talk about those corn prices and what's going on as it relates to input costs coming up in a little bit. We're going to talk slaughter numbers next. As we take a look at those, we continue to run significantly higher than a year ago. But again, a reminder, this was kind of in the height of all of that disruption to the supply chain, and we saw slaughter numbers pull back drastically a year ago. Let's talk about what we're looking at and how things have been running.
Yeah, so for the week ending May 1st, USDA is estimating a run of 649,000 head of cattle. That's down 16,000 head from a week ago, but up 210,000 head from a year ago. On the hog side, a run of 2.454 million head of hogs for this week. That's actually down 19,000 head relative to a week ago, but up 914,000 head from a year ago. And the year to date, just to make sure we're paying attention to what's happening, we started the year especially on the hog side, down nearly 4%. But year to date now, with what's been happening the last few weeks relative to a year ago, we are unchanged with 44 million head of hogs slaughtered year to date.
Does that change how we look at the comparisons from here on out for the rest of the year? I know when we look at slaughter numbers, we like to compare them to year ago levels, but does it come with its own built-in asterisk for the next several months?
Any number we talk about this year relative to 2020 should always have the asterisk beside it. So yes, we're going to have to continue for the remainder of 2020 to think about, for the remainder of 2021 to think about how 2020 numbers affect the comparison point for us. But it's amazing we started the year 4% below, and just in a matter of a few weeks have caught back up on hog slaughter to have year to date unchanged from a year ago.
And I'm pretty sure we'll be ahead of year ago levels as we move in the next few weeks and months.
And we probably, as we get to the end of the year, might slide below as well. It's interesting. We pushed a lot of those hogs further out in the fourth quarter of 2020. What do we get out there in the fourth quarter? It's going to be interesting.
All right, let's take a look at the annual meat animals numbers, which was released from USDA this week. And before we get into that, let's talk a little bit about what that report does and what it highlights and what producers need to take from it.
Yeah. So this is an annual report from USDA, and maybe this is down in the weeds for a lot of folks, but meat animals production, disposition, and income annual summary. It gives us, number one, state-by-state numbers in terms of cattle and calf inventory, calf crop, et cetera. So it's more detailed than we would normally get. It also gives us cash receipt information. But again, we're looking at it on an annual basis as a point of comparison. And as we look at that report, a couple of things stick out to me. Number one, in terms of cash receipts, USDA would have said for 2020, $63 billion to the cattle industry, down about 5% from where we were in 2019. And I go, just another COVID-19 outcome, if you will, of that 5% cut in cash receipts to cattle. Hogs, similar story on the cash receipt side. What was $19.2 billion of cash receipts, that's down about 12% from where we were in 2019. So lower cash receipts as these industries dealt with the worst of COVID-19. And I remind us, this is both price and quantity. So when we talk about receipts, we're getting both some of the implications of lower slaughter numbers at times, but then also what were some reduced prices for producers as well.
One of the other things that this report looks into is hog loss, and it gives us a closer look or a more in-depth look or another look at that as well. How do we take that into consideration, as we know that there were producers who had to euthanize animals and what that means for their operations?
Yeah, so I think the good way to start this is, you look back at 2019 and this report would have estimated hog death loss at 11.96 million heads, or 12 million head of hogs that were lost somewhere along the way, if you will. It's another check relative to what I would say is quarterly hogs and pigs that we can sometimes back out similar kinds of numbers. When you look at 2020, that number expanded to 13.6 million head. Tells me that we increased 1.67 million head of death loss. Is that all euthanized, or were there other things going on? I think that's a harder answer or question to answer, but it's important for us to think through. Let's take a state like Iowa, so big hog state here for a minute. In 2019, 4 million head of death loss, expanded to 4.4 million head in 2020.
It's really interesting to see how those kind of check against each other and looking deeper into those numbers.
It is, and I think it helps frame exactly some of the things that happen. I'm not certain we're ever going to know how many hogs were euthanized as a result of COVID-19, but it's another piece of data to the puzzle there.
Now we get to talk demand and domestic. On the domestic side of things, we talk a lot about global demand, but we're going to look at the Restaurant Performance Index, and we continue to see some recovery.
Yeah, that's right. So the index for March of 21 came in at 105.1, which is 5 points up from February of 21. Now, just like we talk about in slaughter, that is being compared to March of 20, that was right in the height of a lot of disruption to the restaurant side of the industry. So it's overstating just how good the situation is here in March of 21. However, when you look at the expectations part of that index, it is still growing up about a point relative to February of 21. I think that continues to suggest to me that we're going to see some continued recovery in the restaurant side of this industry. And we might be seeing some pretty strong demand pull as we speak, Megan.
Do we have to worry if we're seeing an increased demand? We know we're seeing a little bit tighter supplies of product going into the supply chain. At what point do we potentially, or do we need to potentially worry about shortages and availability of products at the grocery store?
So it's a really good question and one we need to be paying attention to. I'm not sure I describe it as shortage as much as tighter supplies. Oftentimes to me that says higher prices to consumers are coming. And that's both a supply side from the farm level that's not growing like it has typically for the past several years, but it's also other bottlenecks along the way. We still have a labor shortage in meat processing that I think adds cost. We still have COVID-19 social distancing guidelines that still add costs. So to me, we're kind of at an interesting point where we could see some higher retail prices as these costs get passed through both to consumers and producers, as well as then just overall tighter supplies pushing prices higher as well.
It's definitely going to be something for us to keep our eyes on as we move ahead in the coming weeks and months and throughout the rest of this year. So we alluded to this a little bit earlier. We keep talking about rising commodity prices, rising corn, rising soybean prices. We're seeing tighter supplies on that end as well. How does this play out, and what are some things that we need to think about if we're cattle producers and we're looking at some declines in prices and tighter margins for our producers right now?
Yeah, so feeder cattle prices, are part of the discussion that I think we have to have, and it's a complicated story going on here. If it was just that we had higher feed costs, we would likely know feedlots are less interested in bidding on feeder cattle, and it might push those prices lower. However, we got everything else going on at the same time, and I just for a minute want to remind us when we look at feeder cattle prices today. It wasn't that many weeks ago. We touched $1.60 on 6-7 weight Oklahoma City steers. We've come off a little bit since then, but we've kind of been flatlined, I guess, is my point for the last several weeks, really since the start of the year on feeder cattle prices. So we haven't seen a big decline in those cash feeder cattle prices yet. Futures markets are a little different discussion for us in that I think we've had trouble with finding ways to reduce risk by laying off that risk in futures markets, because feeder cattle futures, just like this week, we saw those current feeder cattle futures down nearly $5. We're seeing a harder decline in those futures prices. Again, I sometimes say, a 10-cent increase in corn prices is going to get us, I don't know, 80-cent increase. 80-cent decrease in feeder cattle prices just to make that feed yard break even in terms of the added cost to gain. So those things are at play. And when I remind us in August of 2020, USDA said we were going to have a $3.10 corn price for the current year. And we're now sitting there with USDA saying $4.30. And we know cash prices have been around that $7 range of late. It has changed very rapidly. For me, if I'm a cow-calf producer looking to figure out what to do with my feeder cattle ready for auction come this fall, I have less risk management options available as these feeder cattle markets have struggled in the face of higher feed costs.
Do we potentially see a shift again in or contraction or slowdown on the cattle side of things if we don't see these input prices pull back some, if we don't have a good crop year for corn and soybeans and those types of things?
So I think, yes, there is very little incentive to grow the herd in given what we have going on right now in terms of feed costs. And you add the related dry weather in many parts of cow-calf country that are making pastures maybe problematic for folks. I don't see much on the other hand that says we're going to grow cow inventory anytime soon. So we may continue to see kind of that sideways to down movement in terms of where we go with the cow herd for the next 18 months or so at least.
As we wrap up today, on a little bit of a lighter note, my husband came down this morning and had read an article that there was a looming chicken wing shortage, and between my husband and my 3-year-old twins, they can put down some chicken wings. So he's like, you have to ask Scott about this today. So here I am asking you, and is this something that we need to consider or can keep our eyes on? Are we going to not see chicken wings at the grocery store anymore?
Well, it'll be a sad day if that happens, Megan. Number one, I do think we might find tighter supplies of chicken wings here for a while, and to the price discussion. You look at kind of the post worst of COVID-19 back in 2020. And we were talking about chicken wings that were $1.80 a pound. We're now sitting with chicken wings at nearly $3 a pound, and it's kind of been a steady march up ever since what was mid-May of 2020 that got us from a buck 80 to $3. So we have seen a lot of increases. To a little bit of the data that we have available to us, you look at cold storage from the end of March, and chicken wing inventory in freezers was down 30% relative to year ago levels, down 7% from where we were at the end of February. So we're drawing down supplies of chicken wings. I think just like for every other industry, you look at the supply side, labor is an issue to process those chickens, makes it harder to get more wings into the marketplace. It's hard to process more chickens. We're not growing a lot in terms of chicken production so far this year. So all those things on the supply side matter as well in terms of where we're at. And I will say wings are the bacon of pork, right? And so we know there's a lot of pretty strong demand, and I'll be an economist for a minute and say fairly unresponsive to price demand for chicken wings. So even though we've pushed prices a lot higher, we haven't reduced consumption of those wings very much, because I don't care what the price is. When I want chicken wings, I want chicken wings. And so I think we're dealing with that as well. And chicken wings were easy to consume, get as takeout in the midst of COVID-19. So we may have learned or relearned to love chicken wings for those that haven't done it for a while.
And man, they are the bacon of the chicken. Well, let's just hope that we don't have too much of a chicken wing shortage.
We'll have to figure out how to breed those chickens with more wings, right?
More
Is that
wings, less legs.
Is that the ultimate joke here? Or?
Scott, it's always good to see you as we look ahead to next week. A quiet week for us, fairly quiet.
Yeah, it'll be good to see some monthly trade data out midweek next week, and then finish the week with a jobs report.
Sounds great. We will talk to you next Friday.
That sounds good, Megan.
We have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments as well as subscribe. And as you're in the tractor this spring, check out all the great Brownfield podcasts. Those are at brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.